Good afternoon, everyone. It is Shooter Scott Henderson, and hey, we're going to go over some charts, sort of a review of some recent swing trades and some stuff that it looks like it's going to want to continue. Just want to spend a minute there. Of course, at the end of our presentation, please do review our disclosure. Now, I'm going to start off with a firm here. I like this that I say it's building out here. This is a 4-hour time frame. Now, something I've migrated to, I would say extensively, because I'm spending more than half my time in TradingView now. However, it doesn't give me the tools that MotiveWave does from a visual standpoint. But at the same time, I also like these projection tools that I have in this strategy that we have visual, where it's showing us what our potential upside is. And I just want to spend a second on that thought. So looking at a firm here. So roughly close below what is sort of trend support, sort of invalidates this flag for me to the upside. Volume's decent. Let me come in, and this is a strategy, so I have a visual of where our shares are if we have bullish or bearish momentum as an example. And our volume gap, this basically is where we're going to get a short squeeze, which is one of the reasons I'm using the strategy, is because I can see different aspects of the different tools that we have up, which I think gives me a little better picture of where we are. So to the upside, a break above this 72.64, according to the wave degrees and the slopes, according to how Elliott wave and Fibonacci extensions work, we're looking for a move to $99 to the upside, if this flag holds. So, if you bought the, I believe it was January, $70 calls from when we had put this out. I think it was back here, right here where this breakout was, that we were looking for the breakout. I would consider rolling those if you have 70s, or rolling a percentage of those, just a small percentage, because I like the upside potential on this. This is one of the stocks that I'm watching. It's on the VSL. I like it to the upside. It really is. I mean, the reality is we could come in and really even test out the base of this low volume gap here. It's 65 and it's done nothing wrong. So obviously, if we get a pull back to 65, it's a good buying opportunity. All right, let's look at AMD. Now, kind of bearish on the look at the moment. Definitely, we're into this, what I refer to as an extended ABC. Maybe at best we push down to maybe 122, 123. I don't believe so. I think we got a nice base here, nice divergence. We confirmed on RSI here on the floor, right? And we are diverging here. And we're right at this bounce mode that we have here, where we could start seeing some interest. Now, I think we need a little more of a bullish phase in semis for this to really take hold. But this is one that is seriously on my watch, basically above this 144. I like this first shot at $1.50, because there really is no resistance here up until we get to about 150.82. And then there really is no resistance until we get it, fill that gap up into that 167. So our gap fill is at 164 and our gap is above. I just like the look coming into this. So that's my 2 cents. Now, Dominion Energy was, a stock we had put. It just failed. You should have gotten stopped out right here. Didn't work, but I wanted to review that. Things are not going to work in this market, especially considering how limited the volume is, especially right now. We won't see it until, again, probably January 5th. Then our volume percentages should continue to decline. Now, DLTR was on my watch list. Now, this is one of the features that I like, really. When I had put this, or I had looked at it, was, I was looking at this volume node, this squeeze bar, as I'm calling it. I was saying risk our prior low here to the upside. And actually, I don't believe I posted it. And I, at 67.17, because I was looking for this breakout right here off of that 60. So we're now back testing this, but it's flaggy looking to me. So I think the most that we're going to come back is maybe $69. We get a shot at 69 or 71. That would be an entry long. And, we're looking for some decent upside, because this is a 3. So our 5 should measure at least a 382 at 79 to maybe 84. So this is another one that I like to the upside. I don't like the options on this. This is really a common share play. But all right, let's take a look at Hood. Now we're getting a little toppy on Hood. I know a number of you have a few positions in Hood, but look at the divergence here. We're clearly at Elliott wave crossroads here. So if we extend maybe 44, however, notice where our broadening bar is up here. So this is the broadening formation that's forming. So to the downside, all we need to do is take out this 31, and then we could be back to this line pretty quick, as far as the pattern recognition. But we're trailing really good to the upside. And unless Bitcoin closes below 85K, I don't think this comes off, because all of the volatility that we're seeing in crypto right at the moment, is really related to the year end and everybody rolling their flows. I don't know that I don't know that it implies that we're going to have a major drawdown at this point. I'm still looking for a shot, which is pushing it for this month. But I think that we got a shot at 135 by year end. So, Hood's sort of a play on that. We get a back test of 37. That's where you back up the mini pickup. I'm not going to say back up the truck, but I would get a decent sized position on there to the upside. All right, let's look at sub-X, which we had and took profits on to the upside. We are now testing our first back test zone, maybe 96, maybe 95. I'd love it back at this zone for a bounce, but I still like it for continuation to the upside. Now, shop. I think we get a little pullback here. So if you're in shop, I'd be trimming here and take some profits. We have some decent upside. Once we get that little pullback to maybe 111, 112, 109 range, then we should get another push to the upside. I like. Now, sound, we're getting really toppy here. I would be trimming and taking profits up here, right here at 15 bucks. We pretty much have got that first target for the AB. If it is an ABC, I made note and chat about that, versus an impulse leg. So right now it's the count in TradingView sees it differently than the count in MotiveWave. MotiveWave sees it as an ABC corrective leg. So it sees this 5 as our B, and then it's saying we're going to get a pretty aggressive C back down to our squeeze. So, there's some decent risk here. I know that, and I'm forgetting who had actually sold the covered calls on this. I would be cautious on that, only because it's liable to take you out as far as your profits with this look. So let me just give you a line in the sand here, because close below 13.18 on the weekly, I would be closing all of my long position. The covered, I probably even would flip over and go naked on the covered calls until we closed back above this yellow candle at 13.62. The reason I think it would be just a prudent move where we are, you book your gains on this move from $9 to 15 bucks. I mean, we pretty much nailed that. But that's sort of my thought on sound. Now, SWKS. I like this to the upside as well. Our squeeze bar is way the heck up here, so we got a little bit of room to the upside. It's complaining it doesn't have great volume on the candles, which, by the way, these the colored candles that I have here, it's a strategy called the Strat, and I also have a volume imprint study within the candles that tells me by the breadth or how wide the candle is how much volume we have there. And whenever it's blue and not bright green, obviously we have a bullish volume, but it's mediocre. So there's no emotional buyers like we got in this candle. When we broke out above this and we got this push, we had some euphoric buyer. But just giving you a visual here, that's an extremely, all the way over to the left, that's an extremely bullish looking candle. To me, once we flagged, that gave me a sign to the upside. A way to put volume studies into a chart meshed with Elliott Wave. Now, our Elliott Wave target here is about 91. So we break above this 88.63. I like a swing long on SWKS. All right. Now, DG, it did exactly what I thought it would do on earnings. When we posted it in swing trade notes, basically I noted risk 50% of that wick. Never got back to there. We got a little bit of a push, breakout continuing. At this point, we're in the squeeze bar, so I see no reason we don't continue up to about 87. I would trim and trail just because of the way this candle looks, sort of a hammer candle on the high side. We could reverse a little bit here, come back and sort of find trend support, maybe back around 77 and then continue higher. So if you did take that long, cash secured puts you fine on. It's just if you took calls, I would be trimming it. But that's what I wanted to go through this week, folks. Great trading. Until next time.